All right, it's Friday. Are you getting paid today? Is Friday payday for you? Are you going to put 15% of your pay in a long-term investment? I hope so. We're going to go over that in a minute. But first, so yesterday, I'm working on the 9 EMA strategy. Yesterday, I got out of the market. My last trade was at 10:48, right here. If I had waited just another 15 minutes, I would have had a beautiful trade. What I'm trading is this blue line's a 9 EMA. I'm trading two green candles above the 9 EMA, I go long, two red candles below the 9 EMA, I go short. Now, I'm reluctant to go short these days because the market is in an uptrend. So I'm really looking to go long. And man, did I miss a trade yesterday. I had taken three trades, and I normally like to be done by noon. Uh, this is the thing about trading that drives you nuts. So here would be the second candle that closed above the 9 EMA. So on my strategy, I would have went long right here, right on this candle. And man, what a run. Damn. That is sickening. But hey, trading does this to you. Trading does this to you. So all I can do now is forget about it and uh, and move forward. Okay, so it's Friday, it's payday, right? I want you to go to this website, investment-estimator.com/ S&P 500 calculator. What this calculator does, it tells you what you can earn or what you would have earned by investing in the S&P 500 over how many years. Now, I've been investing in the S&P 500 for the last 35 years. So, this is why I'm trying to get across to you why it's so important to put your money to work. Okay? So, if you started with an investment of just $1 35 years ago, or look at it in your situation, you're starting now and you're going to invest for the next 35 years. Can the S&P 500 do in the next 35 years what it's done the last 35 years? Maybe, maybe less, maybe more. You don't know. But the important thing is you have to invest. So if you earn $35,000 a year, right? And you invest 15%, right? That's $5,250 a year. Let's divide it by 12 months. Let's say you put $437 a month away, right? If you had done that over the last 35 years, in 35 years, you'd have $1.5 million, right? That's based on a $35,000 a year salary with 15% put away every month. Let's say you make $50,000. That's $7,500 a year divided by 12 is $625 a month. If you had done that the last 35 years, you'd have $2.2 million. $625 a month divided by 4. We're talking $156 a week, right? If you make $75,000, 15% of that is $11,250 divided by 12. That's $937 a month. In 35 years, $3.3 million. Now, nobody knows if the next 35 years is going to be as good as the last 35 years. This is telling you what you would have made in the last 35 years, right? So if you're 25 years old and you start investing for the next 35 years, when you're 60 years old, $3.3 million, you think you have some choices then? whether you want to continue on your job with $3.3 million. Now, you have to take into consideration, but hey, you can't afford not to do this. And if you sit there and say, well, I don't have that kind of money, you have to look over your expenses. You have to figure out what you're doing. Are you a young person, you're just working 40 hours a week, then that's not enough. Find this money somewhere. Go drive for DoorDash or something. Get this money because this is what's waiting for you. Pay yourself. Okay. I'm waiting for the market open. I'm going to continue with my 20 trade test from the book Trading in the Zone by Mark Douglas. I highly recommend the book. There's more to day trading, much more to day trading than just knowing how to read charts and creating setups and creating your supply and demand zones. There's nothing more important than the psychology. And the book Trading in the Zone helps you with the psychology of trading. And one of the exercises he talks about at the end of the book is to pick a strategy, pick a trading strategy, pick an edge, and be a computer with that edge. If your setup appears, you take it. No emotion, no nothing. And that's what I'm doing. So the strategy I'm using is I'm trading off the 9 EMA, which is this blue line here, the exponential moving average. 2 green candles above the 9 EMA, I go long. 2 red candles below, I go short. And in my case, sorry, I still got this cold. In my case, and there's the market is open. I like to wait for the first 30 minutes of the market just for all this volatility to work its way out. And I'm also, since the market is in an uptrend now, I am looking more to go long than I am today. There's really nothing on the economic calendar. A bunch of Fed governors are speaking, but it's doesn't mean anything. What Powell speaking on Wednesday was the real thing to pay attention to. And of course, it's FOMC days I do not trade. It's just one of my rules. It's only really 12 days out of the year out of 240 plus trading days, so it's no big deal. I just stay away. Earnings, I don't think there's anything on the earnings calendar today to worry about. So we'll see what happens in the next 25 minutes. See if a trade sets up. Okay, we got one candle closed above the 9 EMA. Let's see if we have a trade coming up next 2 minutes. We're working on 2-minute candles here. Okay, we're long. We're long at 584 on the S&P. This buy. And we're looking for a $300 scalp. That's all we're looking for. And if we get that, we'll put in like a trailing stop. Let's shoot for high of day. High of day was 567. The overnight high was 568. All right, early in this trade, I was up about $100. Now I'm in drawdown right now. If this candle closes under the 9 EMA, I'm going to get out. Yep, yep. All right, I'm out. Yeah. All right, I took $116 loss on that trade. Wait for the next setup. Okay, so here I had two red candles under the 9 EMA. And because the market has been trending higher, I didn't want to go short. And actually, of course, that would have been a great trade. And just so you know, this is what, now it could really be a great trade. This is what trading can do to you. It really messes with your head. Um, oh, what a great trade that would have been. So here's my two red candles under the 9 EMA. I didn't take it short because the market has been trending higher. You have to. I didn't do what I was supposed to do. I didn't do what I was supposed to do. I was supposed to be a machine. Two green candles above, I go long. Two red candles below the 9 EMA, I'm supposed to go short, and I didn't do it. I would have been done right here. I would have been done for the day. Yeah, it sucks. But that's trading, man. This is what it does to you. It really messes with you. And that's really the whole point of Mark Douglas's book, Trading in the Zone, is pick a strategy and be a machine. Your setup appears, take it. Use your risk management to manage the trade. Take your loss, keep the losses small so that when you do win, your wins will take care of your losses. You know, if you go back to yesterday here, I stopped trading at like 10:48. I had 3 trades in the morning, 2 losers, 1 winner for a loss yesterday at $80. And I just, I don't like to trade a lot, more than 3 trades, but here was my setup, my 2 candles, and I missed out on all of this. This would have been, it would have been something. So lesson learned. So now I have to be a machine. And of course, the next time I be the machine, it won't work out, right? This is what I'm trying to impress upon you, that your long-term investing should be your main focus, not trading. I'm trying to illustrate the real life of someone new to trading. This is only my 3rd year. Just because I've been successful investing for the long term doesn't mean I automatically just jump into day trading and I'd be a genius. It doesn't work that way, right? Now, a lot of these young day traders who have been doing it 5, 10, 12 years are really good at it, right? They could teach me a lot about this, and I learned a lot from them. But I could teach them a lot about long-term investing and how to become wealthy over time. So, watch my other videos, subscribe to my channel. And while you're trying to figure out day trading and swing trading, make sure you keep your losses small. Don't use a big portion of your net worth as a trading account, and don't put too much of your trading account balance into any one trade. Watch my videos. I explain all of that. All right. We'll see what happens. I'll stick it out. But I missed this trade. That was another great trade that I missed. But I'm glad this happened, because this is what I want to impress upon you. The psychology of trading is the most important. It's not the charts and everything. Anybody can learn how to set up charts and identify chart patterns and demand and supply zones. Anybody can do that. It's the psychology that screws everybody up. All right, I have to show you this. So here's my trades today, 5-9, right? I bought 5 calls, the 568 calls. The May 16, 568 calls. I sold them for like $120 loss, 562, right? So five calls. I went long. All right. So my strategy, as I mentioned, was 2 green candles above, I go long, 2 red candles below, I go short. But now I had a bias coming into this. This is the whole point of Mark Douglas's book. He's trying to get you to be a machine. Have your strategy, have your edge, and if it appears, you go. Like it was programmed. But I had a bias. The market has been trending higher in the last couple weeks, right? Days or whatever. So I was reluctant to go short. So here's my setup. I had 2 red candles below that closed below the 9 EMA. So on the next candle, I was supposed to go short, which would be at 1014. And then the lowest would be at 1038. I could have rode this whole thing below the 9 EMA all the way down to here, 1038, right? 24 minutes. Now let's look at the actual here's the actual calls that I bought before that I would have gone short, right? The 568, the 516, 568, which are these. May 16, 568. So let's look with the chart. So I'm in TOS, right? Thinkorswim. So if I do all my charting in here. Okay, so if you want to trade here, or if you want to do your charting, I would do it on TOS. So you have to open up. It's old TD Ameritrade, but now Schwab owns them. So you open up account at Schwab, you download TOS, Thinkorswim. All right. So let's look at the charting here. So at 1014, which is right here, the option was trading at 560, 568, right? So if I had gone, or 566, so I had bought the puts at 566 and then rode them all the way down, which was what I was supposed to do, to 424, right? That'd be minus 424 is $1.42 times 5 contracts, which is times 500 shares, is $710 I missed out because I did not follow exactly what Mark Douglas talks about in his book. And this is what I'm talking about. This is how trading, it'll drive you nuts. It'll drive you nuts. So here we're back above the 9 EMA, but I only had 1 candle close. I want 2 in a row closing green above it. So this is a non-trade right now. So I'm glad that all this happened. Unfortunately, I left between yesterday and today, I left a lot of money because yesterday I didn't stick around long enough. You know, I had it in my head to be done trading at 12 o'clock. I should not have done that. And today I didn't take a trade that was right in front of me. My setup was right there. I didn't take it because I went into today with a bias. And I lost out on a lot of money. So there you have it. All right, so now we're getting 2 greens above the 9 EMA, so it looks like I'm probably going to be going long again. Okay, I got out of that trade. Um, we're kind of getting close to the VWAP, and we're just kind of stagnating here. So I probably got out a little early. Um, but I really had to make up for this mistake that I made back here by missing this trade here. So I wanted to end up green on the day, so I made $153 on that last trade. um, so we'll see if another trade sets up. Oh yeah, I'm glad I got out of that trade because I would have given back everything. I know it's not really sticking to my predetermined plan of not getting out until it closes, if I'm long, until it closes below the 9 EMA. But I screwed up by missing this big downside. I was really supposed to take a trade right here on that third red candle, and I missed it. So I really wanted to make up for that. So, all right, I'm short again. I have 5 S&P puts, May 16th, 564 puts. We'll see what happens. We had 2 red candles under the 9 EMA, so I went short. Hopefully we're going to go low of day. We'll see. All right. I got out of that trade for about a $50 profit. I wanted to just end my trading for the week. It's Friday. I don't want to do anything really stupid. I missed out on a great trade today because I did not follow what I was supposed to do, which is the nature of trading. It was a rookie mistake, but tomorrow morning, Saturday, I'll do a recap for the week. All right, subscribe to the channel, give it a like, and share it, and put any comments in the comment section. Ask me any questions you want, and I'll see you tomorrow morning with a recap video.